Have you ever felt like investing is this complicated game that you're just not meant to win? Like you need to be some kind of Wall Street genius to even stand a chance? Well, what if I told you there's a powerful and honestly a surprisingly simple tool that could change all of that? Today, we're going to pull back the curtain on index funds, and you're about to see why they are the secret weapon for millions of everyday investors. Just think about this for a second. What if you could invest in the entire stock market without ever having to pick a single stock? Seriously, no more sleepless nights trying to guess the next big thing, no more anxiety about whether you picked a winner or a loser. Because let's be real, trying to find that one needle in a haystack, it's exhausting. And hey, this isn't just some theory. Check this out. If you'd put $100 into Google a year ago, you'd be sitting on about $148. Not bad, right? But if you put that same $100 into another massive household name like McDonald's, you'd actually have less money, about $88. It's basically a coin flip, even with the giant. So how do we get out of this guessing game? Well, here's our plan for today. First, we're going to talk about the stock picker's gamble. Then we'll get into a much smarter way, buying the whole market. After that, we'll uncover the power of passive. I'll show you exactly what to look for, and we'll wrap up by talking about why real wealth is often built quietly. All right, let's dive right in. The stock picker's gamble. We've kind of touched on it already, but this is all about why trying to choose individual stocks is such a high stakes and, frankly, stressful guessing game. But what if there was a way to just opt out of that gamble entirely? Well, there is, and that brings us to our next idea, buying the whole market. This is the simple, powerful alternative we've been talking about. So how in the world do you buy the whole market? It all starts with this thing called an index. An index is basically just a list. That's it. For example, the S&P 500 is just a list of the 500 biggest companies in the US. Think of it like a weather report for the entire country's economy. It tells you what's happening overall, not just in one tiny. Okay, so if the index is the list, what's an index fund? Well, it's an investment that does one and only one job. It copies the list. It buys every single company on that index in the exact same proportions. No one's making brilliant guesses or acting like a hero. It's just a mirror, and that's its superpower. Let me break it down even simpler. Step 1, you have the index, which is the official list of, say, 500 companies. Step 2, the index fund's whole goal is to be a perfect mirror of that list. And step 3, your investment in that fund now means you own a tiny piece of all 500 of those companies. Just like that, you're diversified. Your success is tied to the whole economy, not just the random luck of one company. Okay, so it's a copycat approach. Why is that such a big deal? This brings us to the real heart of it, the power of passive. This is where we see why this simple idea is a total game changer for pretty much everyone. It really comes down to 3 huge benefits. First, you get instant diversification, which is just a fancy way of saying you're not putting all your eggs in one basket. That means way lower risk. Second, the costs are incredibly, incredibly low. And third, they have a proven track record of solid long-term performance. Let's really zero in on those costs, because this is where your mind might get a little blown. Let's say you invest over 20 years. A typical high-fee fund might turn your money into about $125,000. But a low-cost index fund, that same investment could grow to over $158,000. That is a massive difference, and it all comes down to those tiny fees. I mean, look at that number. That's a difference of over $32,000. A fee that sounds super small, just over 1%, can eat away a fortune over time. With index funds, that money stays where it should be, in your account, growing for you. And look, you don't have to take my word for it. Warren Buffett, arguably the most famous investor of all time, has said again and again that for most people, a low-cost index fund is the single most sensible investment you can make. When he talks, people tend to listen. All right, so you're probably thinking, okay, I'm in, this makes sense, but how do I actually pick one? Great question. In this next part, what to look for, we're going to make this super, super simple. When you're looking at an index fund, you really only need to care about 3 things. First, the expense ratio. That's the annual fee. You want this to be as close to 0 as you can possibly get. Seriously. Next, the minimum investment. Some funds need a few $1,000s to start, but plenty of others let you in with just $1. Find what works for you. And finally, transaction fees. Your goal here is simple. Pay 0. Absolutely nothing.
And here's a really easy pro tip to make sure you never pay those transaction fees. Just open your account with the same company that offers the fund. So if you want a Schwab index fund, open an account at Schwab. It's literally that easy, and it guarantees you won't pay extra fees to buy in.
Investing in index funds, it's more than just a smart strategy. It's a mindset. In our last section here, Wealth is Built Quietly, we're going to talk about the philosophy that makes this whole thing work for the long haul. You're going to hear people say that index funds are boring. And you know what? They're kind of right. And that's what makes them so great. In investing, boring is beautiful. This isn't a get-rich-quick scheme. It's a get-wealthy slowly plan. It's about having peace of mind, not chasing the exciting, heart-pounding drama of the market every single day. So if there's one thing to take away from all of this, it's this. Simple beats complex. And consistency. Consistency beats intelligence almost every time. You don't have to be a genius to build a great financial future. You just need a simple plan and the patience to stick with it. That's the quiet power of index funds.